Hello my dear friends, welcome to my YouTube channel A&F, and today I'm going to discuss with you a very important topic which is relevant to your knowledge and which is going to be rolled out all over the India on 1st of July 2017, which is GST. I think you people have heard, everybody is talking about what is GST, what are the rates, how it will work. So there are lots of questions are here, but I'm going to start here with the basic of GST. So what is GST in actual? GST, you can say, is the full form, that is goods and service tax. My dear friends, you don't need to confuse yourself because you are already interacting with the present tax system, and now the presently taxes have been replaced with one nation and one tax rule like VAT, CST, service tax, excise duty, entertainment tax, entry tax. There are lots of taxes which is going to be merged with one tax, that is GST. Now you are well aware that you are paying VAT for sale or purchase of the goods, and you are paying the CST for if you are making any sales from one state to another state, and service tax if you are taking any services of the lawyer, of the chartered accountants, or any restaurants, or excise duty also will not be there. Excise duty will be charged by the manufacturer. So there are entertainment tax which is charged by the movie or the owner of this cinemas, entry tax, toll tax. There are lots of taxes which is going to be merged with effect from 1st July 2017 onward. So you need to very careful and open your eyes on these rates, so you will not pay extra or less. So next point comes to, now what are these new taxes after GST on 1st of July 2017? You are very much right, sir. There are three taxes have been replaced with the existing tax regime. There will be one IGST, and there will be a full form of integrated goods and service tax. The second, there is the CGST, and you can call as central goods and service tax. The third one is SGST, that is state goods and service tax. So three system will work in our Indian system after 1st of July 2017. Now next, how these three taxes will work. My dear friends, earlier you were paying the central sale tax, and this has been converted to IGST. Integrated goods and service tax will be charged where you are selling the goods from one state to another state, like presently system of the central sale. Very much right. I think this point is clear. You can take an example. If you are in Delhi and you are sending the goods to the Haryana or Gurgaon, this will be charged as integrated tax, IGST. There are lots of other provision about adjustments, about rates, that surely I would share with you in my latest videos. So continue watching my video and subscribe my channel if you like this videos. And now come to the another point, that is CGST. Now central goods and service tax will be charged where you will sell the goods locally. If you are selling the goods from Delhi to Delhi, you need to charge CGST and SGST together in 50% and in 50%. So for example, if the rate of tax is 18%, in this case you will charge on bill 9% on central sale tax, and 50% will charge for SGST, that is 9%. So total will be 18%. Now another point is there, that is SGST, which I have already explained. Now 50% will be charged for the state government tax of the total tax rate under GST. So let's come to take an example. For the cost of the goods is rupees 100, and CGST would be 9%, and SGST 9%, that is 9 rupees. Now total bills will be 180 rupees will be charged to the person. So the total liability of the person will be 18%, which is 18 rupees. If there is no ITC, that's mean input tax credit. If there is input tax credit, then it will be adjusted with the amount. So this issue I'll discuss with you, how it will adjust, where it will adjust. Definitely I'll share with you and will clear your doubts. But still, if you find any uncertainty or confusion, you can write down my emails, and you can give me a comment also, so that I would love to give you a reply at the earliest. So thereafter, now I take an example of this present system of tax in our India. So you can see here, there's a particular cost of the product, this profit, profit is 25%, total cost, excise duties, it is estimated 12%, VAT is estimated 5%, CST 10%, that is also estimated. So total bill amount comes liability for the excise duty, liability for VAT for deposits, liability for CST deposit. So total and net will be deposit. My dear friends, why I am telling you this? Because it will help you what is changed in the current system and the previous system. So let's take an example of seller A is a manufacturer, and he has the cost of the product, that is 2000 rupees, and he add his 25% of share, that is 500 rupees. So total cost comes rupees 2500 rupees, and he is a manufacturer, so definitely he'll charge the excise duty, that is 12%. So it is comes rupees 300 rupees. So there will be no VAT, no CST. The total bill comes to 2800 rupees. So in this case, this person has to deposit 300 rupees as excise duty. In the present system, definitely he will not get any credit anywhere, because he did not pay, or it is assumed that he did not pay anything previous, whether it is excise duty or VAT. So in the second case, this is the person, that is what he vowed, that is what was his costing, that is rupees 2800 rupees. The total bill, the costing for this person is 2800 rupees, and again he adds 25% of his profit ratio. So total cost comes to 3500 rupees. He will not charge excise duty because he is not a manufacturer, he is a retailer or trader. So he will charge the VAT, and the person is in Delhi. He purchased the goods from Delhi, and he is in Delhi, so he will charge 175 rupees. So total bills comes to rupees 3675 rupees. In this case, he has to deposit 175 rupees as VAT, because he did not pay any VAT on his previous bill, otherwise he would have adjusted it. So this excise duty amount will not be adjusted against this amount. Ultimately he has to pay this 175 rupees. Now this B sells the goods to C in Delhi, in the same place. Now his costing was 3675, total bill 3675. So he add his profit, that is 25%, and total cost comes to rupees 4593.7 paise. So he is in Delhi, and he will charge 229 rupees as VAT, 5%. So total bills he will charge from his 4823 rupees. So what is his liability? That is for what he is collected, 229 rupees. What he has already paid, that is VAT 5% to be. So definitely he will adjust this amount. So once you this amount will be less from this, sorry, this, if this amount will be less, okay, this amount will be less from this, so it would come 54b69. So this will be deposited to the government accounts, right? So let's come to another option. Or when C sold goods in other state, when C sold goods in other state, that's mean his costing of the total bill was 4823 rupees, and he added the profit of rupees 25%, then total bills, so its total cost comes to rupees 6029 rupees, and he added the CST because he is selling the goods out of Delhi like Haryana or Gurugram. So he has paid 602 rupees as CST. As per the current system, this will not be adjusted with the VAT because it is going to the central government, and this will not be adjusted with the VAT. Now come to the next point. D sold goods to E. In this case, the total cost of this product was 6632, and he added his profit is 25%. So total cost comes to 8290 rupees. Now he had purchased the goods in Haryana and selling the goods in Haryana, so he will charge VAT. So what he did, the total costing for him is, that is rupees 8704 rupees. So this 400 rupee he has to pay the government, because he cannot adjust this amount because this is a CST. Because this is a GST, it is a CST and cannot adjust this amount. So my dear friends, this was the system as continuously was working in this Indian system. Now let's come to the change to the GST. For example, seller A, again everything is same, nothing is changed here, but my dear friend, I just wanted to tell you that there is one difference is there. The cost or tax will not be charged on the total bill, it will be charged on the basic cost. This is only the main difference with the GST and the present tax system. That's mean if you are charging the tax of rupees 2800, this in the earlier system the tax was charging on rupees 2800, but in this case this will be charged on 2500, not on tax. Earlier we were paying on as double taxation system, we were paying tax on tax. So ultimately all the last consumer was dying. So it is a good step towards the growth of the government, and definitely, and I just give you an example here, this 3906.25 and I have taken it from here, not from the 14103. The tax has been charged on 3906, that is 960 rupees. So my dear friends, as per this system, there is 1249.71. if you see the previous system, the total comes to rupees 1490 rupees. So as per the new system, the difference of rupees 249 rupees you will get as a benefit as a consumer, because you are paying less tax to the government. What will happen in this case? Everybody will come under the system and they cannot avoid, they cannot escape from the government liability. Definitely he has to pay the government. So I hope that it is, if you have understand at least 60-70%, that's mean you will be able to understand 100%, no doubts. And there are lots of other video which will help you, and I am going to share with you. Thank you my dear friends, and if you really like my videos, you can subscribe and watch it. Thank you very much. Share, likes, welcome. Thank you very much.